So hey Flux customers, this is Michael with Back to the Future Trading, and I'm working with the Flux Solar Cycles indicator for NinjaTrader 8, and I wanted to walk you through the process and what I'm seeing in terms of how everything plays out once you have the infrastructure correctly. Those of you that own the software, you know that the program is putting in these dots and these open price lines all the way back into the past up to 10 solar cycles, and I'm using the last two known solar cycles. And if you have the software, you know the specific date of those last two dots. And so what I've got here is I've drawn a Fibonacci time extension from this last dot here to the one in the past. And I'm not going to scroll over here because if I go too far into the past, people will be able to see what that other dot is. And these actually represent the, so far as we can ascertain, the actual peak highs and peak lows of the last two Sunspot solar cycles. And so here's where things get really interesting. This line right here is 150% of the gap between the last cycle in 2014 and the cycle before that in 2008. And then I have one other line here on my chart. It's the 200% cycle of that gap. So between the last green dot and this red dot, you draw a Fibonacci time extension, and be very careful. You can hone it in exactly on the exact date, and it needs to. This line needs to snap exactly on the red dot date and exactly on the green dot date. And be very careful to, in the indicator, make sure that you have the this last dot set to a red. So if you come in here and you look at the indicators, you'll see that I have the sell visual set to red and the buy visual set to green or lime, and here I have a dot offset of 250 ticks to get what we've got. Okay, so with me so far? Once I have the 150% and the 200%, this is where it sort of gets really easy. But I want you to track with me and see where the information goes next. So let's get rid of these crazy grids. Okay, so there's no grid lines here, right? Now I'm going to take the 2014 maximum, and I'm going to take the 150% line, and I'm going to insert a new Fibonacci time extension. And I've set this one up as a template on my computer, and I want you to see that I've got four price levels: 33.3%, 66.6%, 100%, and 0. Okay? So 33.3, 66.6, 100, and 0. Now when I have that, here's what I'm going to do. I'm going to take the right side of that time extension and I'm going to snap it to this line right here, just on that line right there. So it's on the same bar as the 100%. Earlier I called that 150%. It's not, it's the 100%. And then I'm going to do the same thing over here. So I'm going to pull these bars out, and I'm just going to snap the other side of that third onto the same bar. So there it is. Okay, so now I've taken the 100% gap and I've cut it into thirds. Oh, forgive me. Okay, so you see those two lines there in the middle? Now watch how this works. Ready? The last dot here was red. The other side of the cycle over here is going to be a green. So they oscillate back and forth. So the last sunspot cycle was red at 100%. We're going to change the next date to green. And then the 200% would be red. So they oscillate on the hundreds from red to green to red to green. Now the thirds are going to get me through this cycle with oscillating colors. Let me show you what I mean by that. So I have a green arrow at the 100%, and there would be a red arrow at the 200%. So just so we know we're on the same page, I'm just going to come here, and when we get to that date, we're actually expecting selling pressure. So I'm going to put a red arrow there. But now come with me back over here. The 33% rule brings us across the gap. Let me show you what I mean by that. I'm going to take this. The last cycle of the solar maximum was here. And now it oscillates on the thirds. So when I get to this, let's use a triangle up. On this date, we were expecting buying pressure. And now on the next 66.6%, we're expecting selling pressure. You see how that works? And once we have the blocks of thirds filled in, something really interesting starts to happen, starts to take place. Anywhere there's a block, a 1/3 block, I can split that block into thirds again. So I'm going to take each of these 3 blocks and just demonstrate the technique to you so you get it down, those of you that have the solar indicator. And so I can take the block and I can increase another time extension. So I'm just going to pull it out here and now snap that line to the actual bar here, and then snap that line to the actual bar right there. So for this one, if I want to keep track of it, I can actually decrease the size of the line a little bit. So let's go to 2 on the width. And you'll see here that these lines are a little bit thinner than this line is over there. Okay, so remember, it's going to oscillate again. So I'm going to go red, green, and then red, and then the green kicks in. Do you see how that happened? So this green was the primary of the last 1/3 chunk. But I took that 1/3 chunk and I split it into thirds again. So here's that 1/3 chunk over here, right? And watch as we do that a second time. I'll just copy paste. And I'm going to bring those lines over here. So again, we're inside that 33 to 66.6%. And now I'm just going to snap this split again to that line. And then I'm going to snap the other side to the boundary of this other side of the third. Okay, now remember how it works? You start with the last known color. and now you go the opposite color, green to red to green. And if it's in between dates, you put it on the bar just in front of that line. Sometimes these lines will land in between two bars, and so my rule of thumb is put it on the date beforehand. Okay, so once we have the 100% and the 200% of the time extension from the last solar cycle gap, we can start to split those gaps into thirds, 33.3% and 66.6%. Now watch where this starts to get really interesting. We'll take the last third here, and I've got the 150. Well, you know what? Let's do one more third before we do that, just to really stretch the, really sear down the technique. So here's the final third between the last known solar cycle high and the 100% extension. Okay, now check this out. This date here is a higher high green dot, or in this case a green triangle. And what do we know from our histogram guide? We know that when we have a higher high green dot, either the candle before or the candle after, that we're expecting what? A pattern 5. So in this instance, for the ES, the market responds with 3 consecutive dates of higher highs right at the 1/3 of the final third. Now, the next color is what? Red, green, then the next third is going to be red. So I come over here and I put on this date a red triangle. And you see how the ES just slowly cascades down away from that. And now we have the 100%, the other side of the line. Okay, so we had a pattern 5, then we had a regular pattern 2, and then the primary, the 100% extension between the solar sunspot minimum and the solar sunspot maximum is the green line. If we want to get real funky, we can make it bigger. Boom. Let's go with 5. Now, you don't have to stop with the gaps that I've stopped with. These are big cycles. So I want you to come back and look on the ES. And we'll go all the way back to the last known sunspot maximum, which is over here. And look with me where the highs and lows of the cycles are coming in. Okay, so far, if we just put a vertical line on all of the places that we were sort of expecting buying pressure, we'll do a chartreuse 1. I'll hit OK. Now I'm going to take that line, I'm going to copy and paste it. And as best I can, just sort of line it up with where the sunspot rule told us to expect the next sort of big move, right? And finally this one. And then comme ci comme ça, you can do the same thing with the selling pressure cycles. You can come back in through here and just kind of visually keep track of where the sunspot rule of thirds told us to look for selling pressure. And again, many of you are holding investments weeks or months at a time, and I'm trying to teach you how to identify longer term cycles. Okay, so these were big third chunks cut up into little third chunks. You can go even deeper than that, and I'll show you in this next section here how we do that. However, I want you to take note of what is happening from cycle to cycle and what moves are occurring at the dates that are just broken up into the thirds based off of the Sunspot solar cycle. Now, here's where it gets predictive. You'll see that there's nothing to the right except our 200% line. Okay? So everything we're trying to do is predictive. Remember that. This 200% line is here, just like the 100% line is here. So remember, we're going to cut that gap up the same way we cut this gap up between the solar sunspot maximum and the 100% extension. Everything we've done here on the left side of the 100% line, we can do to the right in this gap. Okay? So I'm going to copy and paste the 33-66% lines. So this bugger is here. Let's move it in between the two. And now I'm going to take it and I'm going to span it out so I can see the actual bars. And now I'm going to take this line and I'm going to snap it to my 100%. Okay, so I'm cutting up the gap between the 100 and the 200, the way that I cut up the gap between the 100 and the solar sunspot maximum. Now, once I snap the left side, I have to compress NinjaTrader a little bit. And now you see this line all by itself over here, the 200%? I'm going to take my thirds and pull it till it lines right up. Right there. And you'll see the two things will line up. NinjaTrader doesn't let you stretch it much further than that. We're sort of pushing its capacities right now. But now look at what we've got. Okay, remember our law, right? If this was green, the next 1/3 line is going to be what? It's going to be red. So up here, I'm going to flip that. And I'm going to change the color to red, or a close facsimile. So now we're into predictions, right? Because everything in the past so far, even though the dates lined up pretty good and were predictive at the time, they're still in the past. So now we're living inside of this gap between the 100% extension and the 33% cut of the 100 and the 200% extension. So this is our universe now for the ES. This is our universe. So I'm going to pull this out. This is the world that we're operating in. And I'm going to insert a new Fibonacci time extension. Okay, remember that guy right there? And remember last time we took it and we made it just a little bit, the lines were a little bit thinner. So instead of 3, we're going to make it 2. Instead of 3, we're going to make it 2. So now I take this chunk of thirds and I'm going to break the first third up into thirds. We're cutting the pizza pie, each slice into thirds, and then that slice into thirds again. Okay, so whoop, it slipped. When I do that, I'm on the same date, and over here I'm at the 100%, right? Now check this out. This is the gap that we're living in right now. This is the universe that the ES is currently dwelling inside of. This right here, right? So we'll put a rectangle there. just to sort of help us remember. We're working on this big third. And we know that the last big cycle started here on November 29th. And now this sucker is coming up over here, right? Into, it looks like, late September. But while we're inside here, what else can we do? Well, we went from green to red. So we're going to come over here and put one of those infamous triangles down. And you'll remember from our guide to the histograms that if we have a lower low red dot or a lower low buying pressure time, candle 1, candle 2, or candle 3 being a lower low, they each get what? They each get a green exhaustion arrow, what we would call a pattern 4, or a matrix indication. Okay, so this was a matrix entry right here in the direction of the trend on the ES. We're coming into a green dot. So this next line over here would be the opposite color. And so I'm going to just put a green triangle up over here. But what we know sometimes is that there are what? Back-to-back inversions. When you have a pattern 4, sometimes there's a pattern 5 right after it. And so one of the things I'm looking at coming into here is that as we're coming into this date, and if you have the software and you're following along at home and filling in these lines with me, you know exactly what that date is. That line is on your screen and you know when you get to that candle when it's going to be there. But if we have a higher high, meaning if by that date we are at 24, what's that high right there? 24.5150, 51.50. If we've put in a higher high on that date or the day before or the day after, we're expecting a similar circumstance to the one that we saw over here. Remember how we had a higher high green dot over here? And what the first reaction was? It pulled back from 74 all the way to 1994. Matter of fact, it went even lower than that. It went as far as 1960, which was quite a drop. Okay? So watch for, as we're coming into this area using the Sunspot cycle theory, watch for a break of 51.50. And if you're a Van Halen fan right now, you sort of wonder if the pit traders aren't doing that on purpose. 51.50 is actually a police code. And if you Google that, 51.50 authorizes a qualified officer or clinician to involuntarily confine a person suspected to have a mental disorder. And you have to wonder if maybe the guys that run this market up aren't thinking the people who are still buying it have a mental disorder. I don't know. All right, but once we have that gap, check it out. Remember, once we have thirds, what can we do again? We can cut the pizza pie in half, or into thirds rather, again. So I can take this first third and I can snap it into thirds again. Remember, if I do that, I have to oscillate the colors. So I go from green to red. Once I have red, the next little third will be what? Green. Once your 100 and 200% extensions are in, then you're just running this on thirds. Green, big green arrow, red. Green, red. Now I take this little set of thirds on the pizza pie and I'm going to snap it to the next set of lines. The last arrow here was red. The next one is what? Green. So I'll use little dots for the microcycles. And there's green. And then what's after that? Remember, we're just oscillating the color. Red. And again, if you had the software, you knew this red was coming. You knew the red was coming. The redcoats are coming. The redcoats are coming. So now I want you to look with me at how the cycles are laying out in relation to the thirds and then the thirds again. You think it's... This is when I ask one of those rhetorical questions where you all know the answer, but look at the surprising accuracy of where the highs and lows are coming in and what's happening at those highs and lows. All based off of the number of spots on the sun, millions and millions and millions of miles away. There is an added benefit here too. We can take the ray tool and find the dates of these little dots and little triangles, and you can actually put an open price line right on the closing price of those dates. So everywhere you have a red dot, let's come back over here and we'll use a dotted red line. Okay, so everywhere you see a red dot, come over here on the close of that date and put one of those Gann resistance lines right here. So you see right there where the closing price is. On that candle it was 65.75, it looks like. I have to sneeze. Woohoo! So move your line to 65.75. Not so easy. There we go. Now watch the reaction of price all along that line. You notice how it retraces to that level here, and we have those typical birds on a wire, those very long wicky candles, and then this little touch to the tick, and then it goes away. And the same thing is happening up here. You'll see that there's a support level on this candle. The close of that was 39.75, and we're off by one tick. There we go, 39.75. And so the same thing holds true now. Where are the support levels going to be? The support level here will be the close of this green dot price. So all of the rules that we've been teaching in relation to time and price carry over here. Again, we find the close of this candle, which is 320.50. 320.50. And I'll just move this up to 320.50. Okay, and now look at how price reacts to that level moving forward. Coincidence? Probably not, right? The next green dot in our third, and a third is here. Now, when we look at where I put the dot relative to the line, remember the rule. The rule is if it's in between dates, put it on the date before the line. Okay, so that's the correct candle, and now the closing price of that candle is 83.25. So I'm going to take this line, I'm going to put it up to 83.25. And again, watch how price reacts at that level for the next 1, 2, 3, 4, 5 days. The breakout, the retrace, and then actually slams through it and comes to within one tick of the previous red dot line. Now, why is any of this important? Well, because we can take this last red line and move it up here. And I want you to see the closing price on that date was 31.75. 31.75. 31.75. And now watch how price is reacting to 31.75. Ready? All of these candles don't close above it for 1, 2, 3, 4, 5 days. On the 6th day, it closes above it. It stays above it. It stays above it. There's a doji right there. It stays above it. It stays above it. Closes almost at it. Closes almost at it. Stays above it. Stays above it. And then, poof, right here, something tells us something very important. Close below that line. The next day closed above, but look, below, 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 below. So this tells me that we're still in a selling pressure phase. This is what we expect to see in a selling pressure phase of a time cycle. We would call this a reaccumulation phase if we're following Wyckoffean theory, this volume spread analysis theory. This chop is what's anticipated. Okay? Now, there are two things at our disposal that we can use to identify potential highs from here in places where we expect things to happen. If you remember from my earlier classes, you'll know that one of the most important levels between the last two is the 50%. And so, since its birth, right here, I want you to look where they came down and touched. Okay, so the 50% has been tagged. We also watch 50% above and 100% above. And they didn't make it up to the 50% here. Okay, there's a very good chance if we're looking for a higher high green dot by this date. We sort of expect the market to be in one of three different places, essentially, is what I'm saying. If we're looking for a higher high green dot, I anticipate us to come up to 56.5. Okay, we won't know till we get closer to that date, but if we close above this line again and they make a dash up into here, that would be a higher high green dot, and we expect an exhaustion move. This would essentially be a stop run, trapping traders at the high. The other alternative is we hit this line, reject it, and we come all the way back down to here, all the way back down to the 84 level from the previous green cycle. So there are sort of three possibilities, with the action line being this last closing price from June 5th, 2017. Okay. Now, if you are like me and you're a little crazy in the head, then you want to take this to another level, another extreme. But if you're taking longer term trades, again, the cycle started here, the cycle ends here. The selling cycle starts here, the next buying cycle starts here. Okay, and then we can split this side into thirds to see how long that lasts. If you wanted to go a little crazier, and I'm not saying you should, I'm saying if you wanted to, you could take one more Fibonacci extension. This little third, a third, and a third thing that we're doing. And you could fill in one last section. Okay, so let me show you what I mean by that. We have red here, and then we have green right after that, right? What about the dates in between? Is there anything important happening there? Let me show you what I mean. Okay, so you've got red there, and then you've got green waiting for us, right? So we'll go to green, and we'll take that last little section of thirds, and we'll break this little section up. So right there. Check it out. Ready? You already see it. Some of you watching at home are already seeing this. We have red into green the day before the line. And then what's the next color going to be? The next color is going to be red, which started the day before the line. You see how that worked? So we've taken this methodology that's letting us see the large cycles depending on how far we want to see. And we're seeing these large cycles that are all based off the number of little black colored pimples on the sun. And we can break them into large chunks, smaller chunks, and then even smaller chunks. So where we normally would have had the gap between here and stopped in this last section, we broke this gap up into 1, 2, 3 more chunks to really refine our understanding of what's happening inside of that span of time. And when I do that, it gives me even more information. And most importantly, these cycles are just about spot on. So the markets are following a almost a predetermined, not almost, exactly a predetermined number of cycles. And the behavior at those cycles is 100% predictable. Now, the closing price of this green dot that we just drew here is the same line, believe it or not, as the red one just to the left of it. So there's confluence right here up at the 32 area. And then we had one more line, one more time resistance line up here. Okay. So we've just about deconstructed this as far as we can go without going down into 4 hours and 1 hour charts, which you could apply these same things, right? You could look at the closing times at each of these bars and split those closing times up into thirds again on a 4 hour chart or a 1 hour chart, and do the same thing we're doing here for an even more interesting study. But that's about as far as I'm going to go with it right now. But I just wanted you to see that technique. Some of you have been asking questions about it, trying to understand how I draw these lines and where we go. If you want to see the colors even better, we'll go into the data series and just change the colors of these candles so they're not so Christmassy. We'll have a dim gray for the down candle, and we'll have a light blue for the up candle. And now you can see those cycles play out even more. So this date, as we come into it here, we're getting closer and closer to that next big green cycle. And if we haven't put in a higher high by that green cycle, that's when we're expecting the next push up. If we have put in a higher high by that green cycle, either the day before, the day of, or the day after, it is a run to trap traders just before they drop it back down. Okay, so you're going to want to be aware of that. If you have any questions about this indicator, it is available for sale. It is based completely on a non-market phenomenon, that is to say, the energy coming from the sun in our universe. Please send me an email, Michael, M-I-C-H-A-E-L, at backtothefuturetrading.com. And if you do have the software, recreate everything that I just did here but do it for CL, do it for GC, do it on the markets and the stocks that you're trading, and you'll absolutely be surprised at what you find. We are working on automating this process. You don't have to do it by hand, but for what we've got right now and what we've discovered right now, the methodology deserves a little manual input, I think, and you will be very glad that you followed through this exercise with me back at home. Thanks again, and we will talk to you guys soon.